This is Brandon Parker. Welcome to the Legends of Land show, where it's my job to deconstruct the tactics of elite land investors, how they think about their business, and strategies that drive their success. Clay Hepler built a seven-figure empire by investing in rural land, combining his farming background with strategic business skills. He played lacrosse at Middlebury College, worked at the U.S. Embassy, and now runs Hepler Land Holdings and hosts the Ground Game. Since 2012, Hepler has specialized in buying, developing, and selling rural recreational properties across the U.S., drawing his roots as a farm kid from Pennsylvania. You can find Clay online on Twitter at Clay Hepler. And in this conversation, we are going to cover what it takes to go from a mid-sized land investor making $100,000 to $500,000 per year to a land investor who scales into multi-millions per year, what that jump looks like, and how Clay sees the three key things that hold people back from really scaling their land businesses. Without further ado, please enjoy this wide-ranging conversations with the landman, Clay Hepler.
The Legends of Land Show with Brandon Parker. Deconstruct the tactics of world-class land investors and learn tools to build a seven-figure land business. The Legends of Land Show is starting now.
Clay Hepler, the landman. Welcome back to the show, my friend. How you doing today?
Dude, I'm good. One of the things that sparked this conversation, and I don't know when this podcast is going to be released, but you posted the top land investing podcast, which you had some really awesome hard hitters on here. And it was Clint was number one. For those that don't know, Clint Turner, he's been in the space for a while, man. I mean, he's the guy before everyone really got in the space. One of the few people that I think is a pretty high integrity guy of what I understand. And then I was right below him. And I'm like, dude, I don't want to be below him. So I want to bring the heat for this next episode for 2025. Clay Hepler's at the top
Okay.
of the list.
We're coming for Clint Turner. We're coming for the Clint Turner top position on the Legend of the Land podcast. Let's go get it. I know we briefly spoke, but you've got some interesting takes, some where the land market's going, that type of thing. But yeah, what's new? What's going on?
I think one of the things that we ask ourselves in this business is, first of all, like technology and information is accelerated business in general. And a business market, a market in general, is going to be dramatically different from one year to the next. And so what I've realized is even this summer, I was saying, hey, there's a massive opportunity to serve an underserved niche in the land space, which was helping people go from zero to hero, zero to 100K, zero to 200K. What I've really realized with that is there's so much information out there. That's actually not where the land market, first of all, needs to be served from businesses, from services in general, but also what really is the big pain points for the land space. And so I've realized in my short tenure as a land investor and business owner is that markets mature, right? Every single market, there's a market efficiency theory. And so the markets become more efficient over time, which means that we just have to pivot it as business owners. And so where people are really struggling now is really not getting started, which there are a lot of people that listen to your podcast. It's, hey, I'm listening to these guys. I really want to get started in this business, which is incredibly valuable. And there's a lot of information that you can gather from earlier episodes. But really the people that I think are underserved and that really need the help are the people in the middle, right? The people that are, this sounds like you're working really hard. You might be at W-2 or part-time land investor or full-time land investor, and you're between 200K to 600K. And you're getting money through the door, but it's not as much as you originally thought, right? That the guru that promised you to be in this amazing business where there's a blue ocean, realizing it's starting to get really hard, right? It's not hard just because of more competition. It's hard because this is a business, right? And so I always think of the business. So my background was, before I got into land investment business, I think I mentioned this in the first podcast, is I was working for a family chocolate, right? And so this business was a high overhead business. You had manufacturer equipment, you had a lot of human capital, like a lot of people like physically dipping copy and manufacturing the product. And holy heck, Brandon, you think that the margins in this business are bad now that there's quote unquote more competition? get into a different business, right? These
Yeah.
are like 10% margins, or restaurants are like 10%, 20% margins in terms of the net that you get after paying all your overhead.
Mm.
What I'm really seeing is right now, there's this very underserved opportunity to help people get from that middle to the top. And so the way that I thought about it to operationalize it is there is the system problem, there is the vision problem, and there's the capital problem.
Hmm.
And these three columns support a very robust business growth. This is going from our business, it's more than doubled every year. So first year we were, I got to look back through our numbers, but it's 650, 700 in our first year, something like that. This year we're double that in terms of gross profit. And then, we're already set to probably triple that or 4x that. And the reason why is because I've realized we focused on these three pillars and breaking them down to scale.
How would you describe the vision problem?
Yeah. So this is really important, right? So people get into this business for a couple of reasons, but most of the people say, air quotes, I'm getting in this business to have financial freedom.
Hmm.
Right. So
Yeah.
that's the thing that prompts people to get into the business. And then you're sold this, oh, yeah, this is an easy business, or business is easy in general. And you can just go out there and work really hard and hustle and just crush it. Right. The reality is, though, people need to spend more time understanding exactly what type of business they want to build. You go into a podcast, you can listen to people, hey, I'm crushing it in infill lots. I'm crushing it in rural recreational tracks between these acreage. I'm doing 1 to 2 massive deals per year. I'm a development person. I'm flipping middle market rural recreational tracks. I'm entitling parcels. I'm doing strictly owner financing stuff. I'm buying mobile home lots. All these things are different types of businesses. The reality isn't, and the way that we focus on, I think about vision is the capital component, like what type of profit you want to build. And then and then the second thing is what type of business you want to have. At the end of the day, when you get to a certain level, it's just like managing people. That's what all businesses turn into.
Yep.
But in the meantime, there's a very different type of problem that you have to solve. If you're focusing on larger tracks, more complex, there's almost more stress because you might have 2 or 3 big deals in a year, Brandon, and it's like, it's done,
Yeah.
right? If you miss up 1 or 2 of those deals, you don't get paid. Versus the person that's the volume game. I'm thinking of someone in the space like, I never met the guy, but Anso Sharma, I think he has a really big wholesaling operation,
Hmm.
and he's just like the volume guy. And he
Yeah.
might make 15, 20K a pop, whereas someone else could make 200, 300K a pop. He probably has a bigger overhead, but he's spreading out his risk, right? And
Yeah.
so you need to understand what type of person that you want. And then obviously what informs that is the actual how big of a business do you want to build. And so um that creates the actions that bring you closer to the goal. There's a really good book, which is 10x is easier than 2x. It's by
Hmm.
Dan Sullivan, who is the CEO of Strategic Coach. He's a executive coach, has been in the business for I think over 40 years. And he really talks about how going 10x, going bigger, whether it's the volume game, whether it's the quality game, really shows that you only have 1 or 2 paths to getting to your destination. And what I see a lot of people doing is they lose momentum in their business because they have so many different paths. They're like, one
Hmm.
month I'm going to do cold calling, and the next month I'm going to do texting, next month I'm going to do direct mail. And then it flows all the way up to one month I'm going to target rural recreational tracks, one month I'm going to do infill, one month I'm going to do this. And they have this shotgun approach to this marketing. And so they market shotgun, they have their data that's the shotgun approach, their county selection is shotgun approach, and the results end up being scattered. And
Hmm.
so that's when I think about the vision component, that's really what I think about.
Hmm. Yeah. There's so many trade-offs there. I've seen, and we've worked with dozens of land clients now. And so I've seen the different methods that people take. And to your point, the 2 or 3 most successful people that I've seen, they've developed their land businesses and then they've chosen, oh, here is where I specifically crush it. This one guy who made 750 grand in 4 months profit, he was targeting stuff by the water. He somehow became an expert in stuff by the water and he just did all lakefront, oceanfront riverfront properties, and he fell into a niche. He got really good at something and he started just absolutely crushing it. And yeah, there's something to be said for having some sort of vision and niching down, but there's getting to that mushy middle. And so I work with a lot of clients who they've made 60 grand or 100 grand and they want to get to that 2 or 300 grand. And a lot of times the people that I see successful getting to that middle part, they leave their filter open. It's almost like a discovery process. Like they come in and they're going to flip rural recreational and they're also going to look for a simple subdivide every once in a while. So it seems like that open filter where you have a big tool belt will get you to that 200, 300 grand mark. But then you're saying to get past that 300 grand mark, now you have to decide on one of these avenues, become really good at it, could drill deeper, and that's how you scale. I mean,
That's
is that
exactly right. The
mhm,
skill set that is required to get to the 200, 300, 400K,
yep.
500K mark is a different skill set than the one that takes from 500 to a million. Now,
Yep.
of course, throughout his man, like you can do this scattered shotgun approach and still be incredibly successful with doing just a high volume of transactions. What I'm
Mhm.
saying is that the path that you pick has to be the path that you pick. There's a lot of people that are successful at the shotgun approach at scale. But what I find happens is if you're not precise in your marketing, you don't really know what a deal is. So I have so
Mhm.
many people that reach out to me and they say, "Hey, dude, like," and I've done this in the past, which is why I know this intimately. I have this parcel, this commercial lot, and it's like right off the interstate. Yeah, you probably saw one of my posts months ago about this, right?
Yeah.
Right off
I've
the
got someone we're looking at one of those right now. Yeah.
It's right off the interstate, and I don't really know what to do with it. And so I spend 25 hours trying to find the right person. I don't find a single person because I think that I'm gonna be the commercial lot the commercial lot guy.
Mhm.
Now, the converse opinion of that is like, Clay, you have to do that to actually become that person.
Mm.
Of course. So there are these two competing ideas, right? Which is what we have to juggle with in business. But you see people that have an unfocused approach, they don't really know where they're going, have a higher contract fallout rate. So
Oh,
the national
yep.
average for like regular wholesalers, like you're talking your hometown wholesalers. I know this guys, by the way, I'm not talking on my ass. I don't know if I could swear on this podcast, but I was a wholesaler and house flipper before I was in land. So the national average is like 70 to 75%.
That fall out of contract.
Right. No, no, the close, the
Oh, that
close.
close.
So
Okay.
the close is
Yeah. Gotcha.
so the 25% or so is usually what you can close, maybe 30%, right? What I find is people that jump from market to market, which has been the mass market pitch for land investors, they have a higher percentage of dropout rate. So what you
Mhm.
see is their ability to scale is limited because their cost per deal goes up significantly.
Yep.
They
Yep.
don't know what a deal is, and so they'll put deals under contract. They'll survey the parcel. They'll go through a variety of different parcels to get to one deal, and so their cost per deal ends up being just a 2x ROAS. They might spend $10,000 to get a $20,000 deal. You can't scale with that. And so
Mhm.
what I'm saying is you can do the shotgun approach from maybe 50K to 500K
Yep.
ish, maybe 700, dude, maybe even to a million. But after you get to that level, you got to be more precise in exactly what you're targeting. Whether
Mhm.
it is I know these specific markets, I've hit them so many times, I'm cold calling. And so I have different results because I know these markets. I'm hitting them once every 4 months, 6 months, whatever it is, and I just have the relationships over and over again. I have such a volume game, or it's the guy that focuses on waterfront properties. But I
Mhm.
bet you any money that guy that focuses on waterfront properties, he might make, I don't know, he made 750K in 6 months, which is pretty insane. But his profit numbers are probably a lot higher than you think because he probably has fewer people on his team.
Mhm. Yeah. He is. Yeah. I think he's got one helper. So yeah. I mean, plus us, but yeah, he's running a lean operation. So that's true. What's your take on vision or strategy? What are you looking at as far as niching down in areas that you're focused on?
Yeah, I mean, so there's a lot of different ways that you can do this. I think that like my philosophy is all around what have you been good at thus far?
Mm.
Like I said, the initial approach is always let's send a ton of mail to a bunch of different counties. And then I might or cold call a bunch of different counties or texting a bunch of RVM a bunch of different counties. And then when I get to 500K, I can look at all my data. And this is what I do with my private clients. And I say, dude, let's look at your data and see where you have won. What
Mhm.
deals have actually been the deals that have produced the highest return with the lowest amount of effort? And can we just
Yeah.
target those deals? You could be the guy that stumbles into rural infill lots, and you've just been crushing it. And so you know that market already. And so your ability to get to the next level, we're talking about level two, which is the $1 million plus, 1 million to $2 million plus range.
Mhm.
You can get there by focusing down on the stuff that you're really good at. And a lot of
Mhm.
times that's in the business, right?
Yeah.
So people want to go out and hire some person to get really good at this specific marketing channel, right? When in reality, they just need to focus on what's working in their business. So if cold calling's working, then just use the cold calling to target more of the properties that you've already been successful with
Mhm.
and use the data that you have in your business to dictate that, right?
Yeah.
So it's a rolling vision. Like at the beginning, it's really more about just putting the scatter shot out there to see what works. And then when you get to these certain milestones, then you're just like, okay, now I need to take it to the next level. And so I can look at the what has been successful. And then maybe I work with my partner, whether it's a cold calling texting partner, or maybe it's just I have an internal marketing person. We look at the data together and we could say, hey, how can we build out a campaign to be more precise in what we're targeting?
Mhm. Yeah, that's a Nassim Taleb, one of my favorite economist philosophers. He talks about via negativa, but addition by subtraction, but basically getting rid of stuff in your business so that you can drill deeper into other stuff makes a ton of sense. I mean, classic 80/20 too. Like, where's your money coming from? Do more of that.
Yeah, dude, it's see, this is the thing. It's simple. We all know it, but we just don't do it,
Yeah. Sorry, that's the entrepreneur's plight right there. Yeah.
right? And what happens, what I see, here's what I see, like, a lot of people, they'll get they'll do, like, a marketing channel, and then they'll add another marketing channel because they hear that multi-channel marketing is, like, the way to go.
Mhm.
And they should just scale their existing marketing channel to $1 million a year, and then they can add on all the additional stuff. But the operational drag of adding additional marketing channels, specifically early in your business, is so much,
Mm.
right? So, cold calling, people think about cold calling, which you know all about cold calling, but it is a completely different marketing process, an intake process, and sales process than a direct mail piece. I
Yeah.
mean, you're like one in out of maybe 50 to 80 leads is going to
Yep.
convert into a deal, right?
Exactly.
And so what that means is you need a lead manager and you're going to have a lot more betting on the front end and you're going to have to do a lot more offers per deal.
Yep.
But, the cost per lead is way less.
Mhm.
So people think it's like the easier marketing channel. It really just depends on what type of business you want to build, right? The direct mail is going to be more expensive cost per lead, right? But it's going to be a higher probability of closing a deal. So you might be 1 in 10, 1 in 30, but you could be half what your cost per or double or triple your cost per lead for as it relates to cold calling, but your cost per deal is the same thing or less.
Yep. Yep. So you're getting into the systems problem part of your three-part vision systems capital problems for roadblocks of scaling. So the systems thing's interesting because I get that question a lot. People a lot of times want to know, hey, like what's the ROAS on cold calling versus mailing versus texting? And to me, the return on your spend starts to, it's like people are all over the place on that. To me, it starts to come out in the wash. That's not all of them are effective. To me, it's more where you have levers to pull is how good of systems can you build? And you're saying, what type of business do you want to build? Because I had a person who started with us who started cold calling with us and texting at the same time. And I said, dude, that's a mistake. Honestly, I would tell you to just go, if you want to do texting, go focus on texting because people look at these leads that come in, mail, text, cold calling, and they're like, oh, a lead is a lead. Once it like hits my thing, I'm going to take care of it. But that's not true. Like, each of those needs its own sales process. Like when it comes in as a lead, it's in a completely different channel than all the other three. So you're gonna have to build three entire conveyor belts to make that work. And so pick which conveyor belt you want to build and then make that thing hum. That's the way to do it. There's a big difference between how all those are processed, like you're saying. So
Dude, I agree with you so much. And what I've found is every subsequent quarter that I've been in this business, I've tried to look back and say, what has worked and what hasn't worked. In every single quarter, I tell myself the same thing. And I think I'm finally gonna do it this quarter, which is just focus on one thing.
Uh, yeah.
So there's this profound question that I heard about if I were for my so our business goal next year is about 4 million, 4.5 top line gross profit. And so I asked myself the question, what's if I were to just focus on one thing next year to get to our $4.5 million top line goal, what would that be? And your brain will give you 50,000 things, and then it'll tell you, "Oh, man, but what if you do" you know what, you might be more effective if you focus on one thing or 2 things, but this thing works with this thing, and maybe you can combine them. Nope. What's the one thing, right? What's the
Hmm.
one thing that you can do? And so here's how I think about the system, and I'll just give your listeners what we do with our private clients, just one-on-one. So what I tell them is in our first meeting, we do a time audit. And so we focus on for the next 2 weeks between the first and the second meeting, we say, "Hey, let's do a time audit. Let's look at your time, how you're spending it." And a lot of land investors that are at that 200, 300, 400, 700 range, which is the majority of my clients are in between there. And where I see a lot of people stumbling, they just can't get past this part.
Yeah.
And so they do this time audit and they realize I'm doing so many things that don't actually make me money.
Yeah.
And when you do that time on, it gives you this visibility, and then we go through this hiring delegation ladder: admin, fulfillment, marketing, sales, and leadership. And so people want to hire sales before they hire an admin person, which,
Yeah.
dude, just get on the phone. And if you don't like getting on the phone, I'm sorry, got to get on the phone and close deals because that's the highest dollar value thing you could possibly do. And then after we do that, so we do this time on it, and then we check out the delegation ladder. We say, hey, where can we bring someone in to support you to get to your next level? After we focus on that, is okay. So then, what's the actual constraint for us to get to our next level? And so there you have entrepreneurs like Alex Ramosi that really popularized this concept, which is from The Goal. Elia Goldbrat wrote this book called The Goal, which is basically around the theory of constraints, which is a system will grow until there is a constraint in the system, and it will grow until it hits the ceiling, and then it won't grow any faster or grow any more unless the constraint has been addressed. Okay. So let me tell you about a constraint that we were dealing with. So we were dealing with a constraint of close like our cash conversion cycles were very slow, right? Which essentially we cash conversion cycles, the time it takes from a lead to convert into a dollar sign, right? And your ability to shrink that is directly related to your ability to scale. So imagine if you can buy a deal, buy 4 deals and sell 4 deals per year at 15K versus buy 2 deals a year at, let's say 20K. You might make more money on the 2 deals, but your ability to scale is going to be a lot faster because you can turn your money quicker, right? You can redeploy it and scale your business faster. And so we are like, hey man, how do we actually solve this problem? And this is the exact process that we go through. Um, okay. So we solve this problem by, is it building a dispositions department? Is it like actually physically going out and actually building a department that helps us with selling deals faster? That could be a thing that we do.
Partnering.
Maybe it's just market selection
There you go.
because everyone wants to think that it's the end of the funnel. It's my broker that's screwing this up. It's the time in the market. It's some made up thing that's not actually that's not they're not actually productive. Or I need to create my own disposition department. Maybe not a bad idea depending on your scale. But I got a deal under contract for $40,000. This was 2 weeks ago. Okay.
Hmm.
We thought it was gonna go, sell for 80,000.
Hmm.
Guess what it sold for?
70.
140K
Crushing it.
in
Okay.
24 hours.
Whoa. So
And
you got
so
a nice market.
so we got the good market, and so it doesn't matter what the broker is. If you have a good market, you can sell your deals faster. And so what we realized is we could spend this quarter, Brandon, focusing on building out a disposition department, which by the way, I hired someone to do that. So, but I, the highest paid employee, should spend my time on data and market selection and getting more precise in the things that we're targeting. And so that's like a constraint analysis. And so my whole quarter, I was just giving an example in the past, my whole quarter was dedicated on this one thing. So
Market analysis.
it wasn't acquisitions, it wasn't lead management, it wasn't processes, it wasn't building out a beautiful Notion board, it wasn't transactions it was literally that.
Hmm.
And so a lot of people will say it should be, I should do dispositions and also I should do market selection. I should do data management. It should do Notion. I can all do these things together because I'm like an entrepreneur and I work 80-hour weeks or 90-hour weeks.
Yeah.
And you can, but the profound knowledge that you get in the depth of the process and the potency of your processes that you create if you focus on one thing versus two or three things or four things during a quarter will allow you to scale.
Hmm. Yeah. I mean, that's brilliant. That's the easiest thing to talk about and the hardest thing for entrepreneurs to do. Because like you get the 100 ideas and I'm going to fix all of them. You start fixing them all at once. None of them get done. But when you look at, so I have a board that I start with every morning and it's my morning ritual board. But the thing is, like, crush these things today. And what are the two things or three things that will move the needle forward the most? And then somehow dedicating time to those. That's a constant battle for anyone. You're talking about that same concept on a quarterly level. What's the constraint in your business? Where's the bottleneck? And if you relieve that bottleneck, it's going to go and it's naturally going to hit a new bottleneck and you'll have something new to work on. Our bottleneck that we've identified for the first quarter of 2025 is follow-ups because we have thousands of leads that our follow-ups pretty good. We have some automations and things like that. But what if we were to take those thousands of leads and with conversational AI, just absolutely crush follow-up? Like that's calendar people booking on the calendar. Those are leads that we're bringing back out of nowhere. So that's where we think that one of our constraints is right now. It's just we have thousands of dead leads and that's money on the table. And yeah, it's interesting that every business is going to have its own constraint unique to exactly where you're at in the scaling. And how do you think about, do you have any frameworks for people that might be able to like look at their own business and identify where their constraints might be or where their system problem might be?
Mhm.
How do you think
Mhm.
about that?
Yeah, I think naturally everyone knows where they really need to put extra effort. I think naturally that actually people know, but the easy answer a lot of times is like you don't have enough leads.
Hmm.
Like for most people, it's are you overwhelmed? If you're not overwhelmed, that's the problem.
Yeah, 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 yeah.
Right? Because here the deal is if you have a good opportunity, you will get it funded. There's no problem with funding deals. There are plenty of land funders in the world, and I fund land. The neighbor down the street funds land. There's a lot of land funders, right? And so usually the core thing is the leads. I mean, I find that's the core constraint in probably 80% of the people that I talk with, whether it's on
Hmm.
Twitter, whether it's on Instagram, whether it's people personally one on one. When I talk to Justin Pichet, my co host of the Ground Game podcast, it's really just a lot of times it's the lead thing.
Yeah.
And you can solve this constraint with just being better at marketing. And a lot
Hmm.
of times being better at marketing is being more consistent. Oh my gosh, did this guy just say
Yeah.
consistency in marketing? Like, I can't believe it. I've never heard that. But the reality is a freight train going 55 miles an hour can burst through a multiple foot concrete steel reinforced wall, 55 miles because it's just steady Eddie. It's got the momentum that it needs. What I see a lot of land investors do as it relates to their lead flow and why they can't really solve this constraint is they'll get super excited. They're the entrepreneur in their family and they think they're special, right? They think
Yeah.
that I work harder than everyone else. And you're like, okay, dude, yeah. If you're special, then the mark of someone that's special is someone that doesn't do what we just emotionally feel like we need to do, which is
Hmm.
I'm just gonna call up Brandon. I'm gonna say, hey, Brandon, give me 5 cold callers. And you're gonna be
Hmm.
like, dude, you don't need 5 cold callers now. You need one for a
Yeah.
couple months. And then when you get that lead flow down, then you can add 2 or 3 or 4,
Yeah.
right? But the reality is people send out a bunch of mail at the beginning. And I noticed this when I had the Landman Accelerator, a couple of clients with that, and people would send out mail at the beginning, and then month 3 and 4, they'd be like, "I'm not getting as much hits as I thought I would get, and I'm just gonna stop." And I'm like,
Yeah.
"This is the moment that you need to stay consistent."
Yeah.
And cliched as it is, oftentimes the constraint of them marketing is the consistency. After you get to the consistency, as we talked about earlier, right? You see these very clear delineations between beginner's business and the mid-side business. The beginners is like, dude, just do your job, send out mail, talk to sellers, get deals under contract, connect with funders, build out basic systems, have an okay CRM. You're good.
Yeah.
And the middle group is, okay, more precise targeting, have that vision so you can exactly know you're the waterfront guy, you're the subdivide guy, you're the infill girl, whatever. That's where the constraint happens in that size of market. So first it's volume of leads, then it's quality. So you see that sort of this very clear delineation between the beginning and the middle. I find that the way that you can stair step quickly is you get from volume to quality in everything you do.
Yeah. Yeah. And what do you think the step after that is? Then is it finding constraints and attacking those constraints to scale after that?
The step after leads
Yeah.
is
I mean,
people.
oh,
It
there you are. Mm.
is 100% people because once you solve hey, I'm like, I have a lead problem. And now you're like, oh shit, like Brandon, quit sending me leads. Right.
Mhm.
By the way, guys, I'm not like promoting Brandon. I just like the guy. So I'm saying this, but after you get that, then you got to hire people. And the
Yeah.
most expensive thing to your business in your business is a bad hire. Oh my gosh,
Mhm.
this guy's just did he just say another cliche? Like, I'm sorry,
Mhm.
guys, but it's true. Like, I've gone through so many people in my business because of just really poor hiring. And so the next constraint is hiring people and in leadership, right? I talk to people all the time. I had a guy that just joined a couple of weeks ago, has a successful business, hired his friend right before he and I worked together. I said, "You know what a condition of he told me what he was paying his friend and what his friend had done over the past month and a half, and I'm like, "One of the conditions of working together is your friend is not working with you anymore." We hire out of convenience and we hire out of pain a lot of times
Yeah.
especially when we're early on, we're like, my house is burning. I have too many leads. I don't know what to do. And some guy on the internet told me I should just hire some global talent and I don't have the systems to hold them accountable. And I don't know exactly what good looks like because I haven't defined it
Mhm.
before I hire someone. And so I just hire someone and then all of a sudden they take a sick day, every twice a week for the first 3 weeks. And I'm like, wait, this person's sick a lot. It's no, dude, you just hired the wrong person.
Mhm. Mhm.
And so as soon as we were talking earlier about the systems component. Well, we do the time audit. We see the what we need to delegate. And oftentimes it's this admin person. And then we elevate and we have our admin person, our executive assistant. They're managing a lot of our stuff and we're still closing deals. And then all of a sudden we need to hire the next level, which might be the fulfillment. And then the marketing, maybe it's an agency or someone else. And then where I see a lot of people mess up is they hire the wrong person for admin or hire the wrong person for the marketing or the operations. And then they need to redo everything or they prematurely hire the salesperson when they try to hire an acquisition person because they're like, I need to scale out of my business. I'm like, dude, you don't need to scale out of your business. You're making $250,000 a year. You don't need to scale out of shit. There's nothing to scale out of, right?
Yeah.
And so you need to focus on a lead manager, someone that can filter your leads, qualify your leads, right?
Mhm.
Instead of hiring someone to come in and be the buck stops with you salesperson, you want to have someone at the front end that can really hire or that can really filter your leads, right?
Mhm.
And so making sure that person's good, not just a beating pulse, which is what a lot of land investors do. It doesn't work anymore, by the way, because there's more competition. So you have to have higher quality people, right? And you also want to wipe the floor on your competition. And so in order to do that, you need to have higher quality people. And so that's the next constraint that I see with everyone.
Yeah. And that lead manager can also be looked at as a sales setter. There's a reason that a lot of times you'll call to talk to an agency. You're not talking to the main salesperson or the owner first. You're talking to one of their people who's asking you about your goals and seeing if you're a fit first. That's what a lead manager is. They are getting it down to 10 or 20% of leads and sending you the people worth talking to. And yeah, that's very clutch. Everyone's trying to hire an acquisitions manager, but that is skipping a step. It's skipping a couple steps for sure. For
Right.
sure.
Unless you're independently wealthy.
Mhm.
So if you're listening to Brandon and you're like, I have so much money in the bank. I'm just going to skip all these steps. Okay, fair enough. I didn't have that when I started. And so this is the scaling roadmap for someone that is, starting out with maybe 30,000, 50,000 in the bank. They've had a first success couple year 1, year 2, year 3, and they want to get to the next level and they want to be an entrepreneur in their business. They don't have the cash to just outsource it to someone else that can do this all for them.
Yeah. And land is interesting. I've actually seen a couple people that have come in and they've done business before. They're savvy. They know how to hire teams, and they come in and they just start hiring people and plugging them in. Like have a guy who hired a an assistant and then a acquisitions manager, and then turned that acquisitions manager into a high level salesperson and just started pumping leads through, and he's crushing it. So like, there's something to be said if someone's got like a bunch of money in the bank and they can just buy a team and put it in place. That's doable for people who know what they're doing and have capital. But yeah, that's a that's not the path generally for sure. There's a cool app for anyone who heard Clay mentioning the time tracking, but it's called Rise. I use it, Rize. I'll put it in the show notes. But it's an AI app that tracks everything that I'm doing on my computer, what keeps track of when I'm messaging, when I'm in Slack, when I'm in Note, like all the stuff. And then it gives me weekly reports on how I spent my time, how much focus time I had versus bouncing around. And it's pretty cool. So anyway, tracking is a key part of what you do, it sounds like.
Has that significantly impacted your productivity?
For me, because it will pop things up on my screen. If I'm making social media content and then I open Slack, it'll pop something up on in front of me and say, "Hey, is this a distraction?" And so it's a stop in my just bouncing around. I'll be like, "Yes," and I'll go back to creating social media like I'm supposed to. So yeah, it's a cool tool like that for someone like me who's does probably a lot of people like me who do a lot of things at once. Yeah, it's sweet. So we talked a little bit about the vision system, the capital problem. That sounds like it relates to your cash flow cycle, narrowing that as much as possible. What else plays into the capital problem?
But there's a couple ways to approach this. The first thing is finding a really good strategic funding partner is
Mhm.
very important. I would implore the listeners to find someone that can help you with due diligence, especially if you're starting out. So find someone that can help you with due diligence. They might be able to help you with co-signing on a loan if you're going after a larger track. If you work with the right funding partner, they can bring expertise to the table that you probably wouldn't have if you were just working with some normal funding partner that's been in the business for a long period of time. There's been a lot of new, interesting funding companies that have come in that are more of a partner. This is not new, by the way. This is not isolated to land space. There's a really massive company. It's called HarborVest Partners. It's a multi-billion-dollar private equity company that they come alongside other private equity companies and they co-invest. So a private equity company will come in, they'll have something in the technology sector, and they'll bring the deal. And by the way, I'm not affiliated with HarborVest. I don't know everything about them, but I just understand this is how their model works. And they become a co-GP. So imagine your funding partner is a co-GP. And this person, bring expertise and they bring capital, a big capital slug to the table. And so, especially for the land investors that are looking to scale or start out in general, having that strategic funding partner is critical. And this is how I started out and this is how I scaled. And I outgrew my funding partners because they were more just money partners. They weren't relational or due diligence partners. But I think that there are new hybrid funders that are coming in and saying, hey, we're going to help you take your business to the next level as this sort of harbor vest type of co-GP that will come in and help you with the getting your first subdivide, getting it through. Getting if you have a subdivide and you're like, "Hey, I don't want to pay a consultant. I just want to come alongside, have someone come alongside." They'll bring all the capital for me and they'll help run the deal with me. There are structures like that. People in the real estate syndication space do this too.
Mm.
Multifamily syndicators, industrial syndicators. There are the GP operators, the general partner operator that bring the deal, that negotiate the deal. And then there are the co-GPs that are the funding partners. And so they come in and they fund the deal, pure equity, right? And then they split the profits on the back end. This is not new to land. It's just been the way that the land space is the equity partners. That's just been how it is. But this is very popular in other spaces. And so for me, I think a lot of people are missing that part of the strategic partner. They're just picking a person for, maybe it's for the interest rate, maybe it's for the funding rate, but they're not thinking, hey, how can this person help me strategically take my business to the next level? It's almost like a consultant that is also an equity partner. Now, here's one interesting tip. Depending on the equity partner that you have, I started doing this early in my business because one of the core problems with land investing in general is you're capital constrained and your deals may take longer than you originally thought. And so you're like, dude, I want to invest in marketing to keep my business going, but I don't know. I need $6,000 this month or $15,000 to keep the business going so that I can make sure that I get more deals through the door. And so a strategic partner might be able to say, hey, here's an extra $3,000 towards your land operation.
Mm-hmm.
And so you can, maybe the purchase price is 64,000, but you can have a little bit more to have a little bit of extra funding for your land operation to keep it going. And I started to negotiate this early on. And where this came from for me was the house flipping world, right? So we get rehab loans from house flippers, right?
Mm-hmm.
And so I thought, why can't we do this in land investing? Why can't we help them? And sometimes the rehab loan helps the person scale beyond just the rehab of that property. Of
Mm-hmm.
course, they never say that. And this is what helped us scale our business faster. And a lot of times our private lenders actually knew that we were using it for maybe our next direct mail piece or maybe our next call. And it wasn't about over leveraging. It was more about, because in fact, this is better for the land funder because they have the equity in
Mm-hmm.
they actually have the name on the title, so they're not concerned about you going bankrupt like a private lender might be. But this is a strategic way for you to continue to scale your business. And so we've started to do that, kind of come in and been a funder and also a cash injector for a little bit of cash to keep the business humming, right? Almost like an acquisition fee or a asset management fee that these people get at closing, similar to people get in the syndication model. And so that's been a way that the people that I've worked with individually they like that approach. And so strategic funders can really bring this creative part of the process to the table, and it enables people to scale faster and get to these critical parts of the process, which, hey, I'm getting consistent cash flow. And so I might not need this anymore. But at the beginning, I might need a couple of strategic capital injections.
Yeah. Yeah, you're smoothing out that cash flow cycle a little bit. They're not feeling that cash crunch because now they have that extra 10 grand in the bank. How is that structured? Like, when are those disbursements, or what might that look like? Was it something like a rehab loan where, okay, I'm buying this property, it's 60 grand, and then you fund an extra 20 grand, so that's sitting in the bank as a buffer as they deal with that property? Like, when's the money come? How much is it? What's the cost of it? What's a little bit more of the structure of that deal?
For sure. I mean, we structure it it's just an increase in the basis, and we creatively structure it however the individual wants it to be structured, but it's just an increase of the basis. You know what that means is if it's a $65,000 property and they want $70,000, then the funder is paid back the $70,000 first when the deal sells, and then the equity therefore is split thereafter. And so that's it's like just being helpful to the actual fundee in that way.
Mhm.
And then the splits can be adjusted in that way just to make sure that the funder is getting the right return and everything like that. but that's the way that smooths out the cash cycle.
Okay. And that is great for someone who is trying to get past that hump. I mean, that's the situation you described is common where they someone's deciding between marketing more, keeping their business going, and emptying their bank account. And then depending on whether that next deal sells in time or not, I mean, people get in sticky situations. That's why they have that. Well, the big part, like you were mentioning, consistency. A lot of that consistency derives from not having cash in the bank, not having enough runway. And so they're making that choice and then they have this stop go. And that little stop go on marketing just that so many people are stuck there. Marketing, stop marketing, and that becomes a nightmare scenario. So when people is this something that you're actively doing, offering with people who your private clients? Is this something that is it on the table for people who come to try to be private clients with you? And talk a little bit more about that whole angle of your business since you've gone away from well, since you pivoted a little bit and upgraded.
Yeah, I mean, so it's very limited people in reality. I only take on 6 to 8 people at a time, and so I
Mhm.
already have 7 people, so I can
Okay.
only, like, really take on one other person, and it's just honestly a real joy for me to give back. Like, I don't make a killing on it, I just really enjoy it, and it teaches me a lot about my business too. We
Mhm.
learn by teaching. And so it's just a little thing that I know I can add a lot of value here. There's no real scale to it because I have a limited amount of hours and I can only dedicate a certain amount of hours per people every month because I have a business to run. But so many people were asking me about it. I was like, hey man, like I can add this value here in a very limited sense for people that are interested, but it's for people that are making over 200, 300K up to 1.5 million bucks. That's the majority of my clients and yeah.
That's killer. What so we covered vision problem, systems problem, capital problem, and those are the big roadblocks to scaling. As far as scaling goes, general thoughts or anything that we passed over a little bit quickly or you want to dig into a little bit more there?
Yeah. One of the things that really helped me scale my business was financial clarity. And people think it's too early to invest in a bookkeeper. It's really never too early to invest in a bookkeeper. We just did our 2025 projection of, hey, how do we get to 4.5 mil, right? How do we get to hopefully more? And we have put it down to understanding all of our business when we add new people, why we add new people, structures of when we add new people, when we hit certain revenue milestones, when we hit constraint milestones. Now, will this change? Of course. But we try to project out and say, I have enough cash on hand for 6 months of operating, 5 months, 4 months, depending on what type of business you have. And so I can project out and say, I'm going to hire people in these parts of my process. Again, using the theory of constraints. But the financial component is the big component to scaling. If you don't have visibility of your numbers, what happens is it's the start stop. I'm sure a lot of your listeners know this, man. It's like one day I'm investing all this money and my deals aren't selling fast enough because I've gone way up. I've added 5 cold callers and now I have to call Brandon and I got to do 1 cold caller. Or I'm sending all this mail out and one month I send 15,000, the next month I send three. And so a lot of times we can prevent that by having financial clarity. So having a 13-week rolling cash flow forecast, this is something as simple as you can go online and download it and just start to put in your numbers and start to understand your cash conversion cycles and how long it takes you to sell a deal and your average profit on deal. You know, these types of metrics, cost per lead, cost per contract, cost per deal, average profit. How long does it take you to sell your deals? And then understanding your financial position. These are the things that you need to scale. Because we're building a
Mhm.
conveyor belt here.
Yeah.
And the conveyor belt that we're building is defined by the numbers that we have. How much cash do we have on hand? How long does it take us to sell deals? And so we can make strategic decisions in our business to scale. Hire someone, don't hire someone. I don't want to hire someone because I have an emotional need to hire someone or I'm feeling overwhelmed. I want to hire someone because it's the right financial and data driven decision for our business.
Mhm.
And that's a big part of scaling.
That is, I think, a constraint of so many businesses out there, just not knowing your number. If you ask someone something about their business, about the cost to acquire a customer or their churn rate or something, if they have an agency, if they don't know, then you can almost tell the size of what they're building. So if you don't know those numbers, then okay, I know where you're at in the process. And I think that's probably true in land as well. What do you do tactically to get those numbers? Do you dig into those yourself? Do you think it's important someone digs in themselves, understands all those? Bookkeeper will get everything organized. Then there is fractional CFOs that'll do it for you. How do you approach that? Or how do you think about tactically getting those numbers in your hands?
I think it depends on the size of the business, but at least the first time around, I'm not the type of business owner that wants to just, frankly, just because I'm not like the gentleman that you were talking about earlier that just can install people in there. Like I had to do this with limited capital. And so when install a new process in a business, before I enroll someone new in that process, whether it's through hiring or internal promotion or moving someone from one part of the business to the other, I want to understand that process through and through. I think it's an incredible exercise, even though it might be painstaking for a lot of those high D visionary sales based entrepreneurs, me being one of them. It's so helpful to actually know your numbers and
Mm.
physically manually do it. Now you can record a loom along the way. You can transcribe the loom so that you have the step-by-step process. You can give it to someone else after. But at the beginning, having that sort of clarity, a lot of times the clarity is found through the work that you need to go through. And so I'm a big proponent of having the people actually collect it. In fact, on my onboarding call for the private coaching clients, I go through this exercise because it takes them hours.
Yeah.
None of them know their damn numbers.
Yeah.
It takes them hours and they're already like, this has been so eye-opening for me
Hmm.
because I don't know any of my numbers.
Yeah.
I don't even know my cost per lead. I'm like, wait, so you have a business that does $500,000 and you don't know your cost per lead?
Hmm.
How do you know if you should add another person in your text marketing?
Yeah. It's tedious. I would say also it's extremely gratifying. Like the point that I finally got all my numbers, which is like say 18 months ago when I finally got things organized enough where I was seeing all the numbers. Now, when the end of the month hits, I still do it myself because I'm excited to go plug numbers into this spreadsheet that I spent months building and like tweaking with and see what the numbers are. And I'm a really high level bounce all around high energy person. Like I'm not generally in spreadsheets, but this end of the month when I do it, it's exciting. It's very gratifying. Knowing your numbers and seeing how the engine's working is, I think, really important and probably overlooked often. So I
I
agree
agree with
with you
that.
there.
And a lot of times I think people don't do it because they're afraid.
Yeah,
It's like not looking at your bank account when you're poor.
it's true. That's true.
And we all know that. I've been there.
Hmm.
And you just don't want to look at your bank account at the end of the month. You're like, dude, how much did I go out too much this month? Did I stick to my budget? I don't even want to look at my budget.
Hmm.
It's the same exact thing. Your business P&L is your business budget. And in order for you to make strategic decisions and actually build a real business, you need to look at everything and you need to track it.
Hmm. Yeah, I think that a lot of times that really hard stuff that's hard to get to, or that's some of the best stuff's on the other side of really hard things. And the numbers sound small, but I know that's really hard for people. It was really hard for me. So I get it. Speaking of really hard stuff, you were a lacrosse player at Middlebury College. Is the rumor true?
That's right.
That's crazy. So what's the main takeaway you have playing lacrosse that comes over into the business world?
I am not afraid of hard work and
Hmm.
delaying gratification.
Hmm.
When
Yeah.
you're a college athlete, when we were there, we were like number 5 in the nation. And we had Middlebury's historically been an incredible lacrosse school, won multiple national championships. And the amount of effort it took in high school to get there. In college, unfortunately, I had a career-ending injury, so I wasn't able to really play out my career in Middlebury. But the, it just teaches you grit. Like anytime I connect with a athlete, a college athlete, or someone that was a really good high school athlete, it just teaches you delayed gratification, grit, and what hard work really means.
Hmm. Yeah, there's something deeply gratifying about hard, painful work. Like even when you get what you wanted from it, it's almost like the looking back on all the hard work is more gratifying than whatever you end up getting. I just grinded so hard and got it, and now I want to get grinding again. That was fun. So I feel you on that for sure. Good answer, man. What else do you have as far as scaling a land business or anything else we might have popped over there a little bit too fast you want to dig into?
Yeah, I mean, I think one of the things is I'm going to just repeat this. Um, get clear on where you want to go. Get clear on what it's going to take to get you there. Now, we have different stages of where you want to go. First thing is that I want financial freedom. I'm just going to work really hard. Stage one, as we talked about, up to 300, 400, 500K, is I'm just going to work really hard. Making sure when you work hard, you're tracking things like cost per lead, cost per deal, uh, cost per contract, average profit, and cash conversion cycle. When you understand those metrics, you really understand your business. And so you can use those metrics to strategically build a plan to scale. But you cannot scale with emotion. You have to scale with data. I can tell the level of the entrepreneur by the amount of data they collect and how deeply they can talk about it. Number two is about the systems, right? Conduct a time audit. Know where you're allocating your time. Maybe do something like Brandon, you talked about Rise earlier. Understand there's a hiring ladder. There is not I'm just going to hire someone and throw someone in. There's a specific set of people that you should hire at the beginning of the process. And then at the end, when you're at a multiple $1 million a year business, then you can hire the COO. Then you can hire the person that runs your business. But start slow and climb the ladder so you're properly hiring people. And then after that, focus your energy on the constraint. There's never two constraints of a business. There's always one glaring constraint. A lot of times early on, it is the leads. A lot of times it is the leads. First, it's the quantity of leads. Then it's the quality of leads. And then after you get through that, I find that the people is the biggest problem. Hiring the right people, putting together a very strict and systematic hiring process, getting references, making sure that you triple check, do multiple interviews, do test trials, maybe even do a test day to make sure that this person fits within the values, the standards, and the vision of your company. After you go from there, then you got to worry about the capital part of it. Whether it's working with this capital funder that has the creative component that you can do what I talked about earlier, or finding cheaper capital if that's what you're looking for, that's where you really need to focus at that point. But those are the processes to really scale. Capital shouldn't be first, it should be last. Because you find good deals, you'll get all the capital you need. And so, in sum, that's what I got. Good luck scaling.
I love it. We both look to find holes in the market, something that I've seen missing at the lower levels. A lot of people are trying to get started cold calling. So I started a school group, and I'm just putting basically everything I've learned about cold calling after 5 million calls this last year and all the processes we use. I'm putting out like a little mini course in our school group. So people who are just getting started, you can send blind offers. Great way to get started. Small batches. You can just get on the phone and crush the phones and find deals. I'm going to put information out there for the school group. That'll be in the show notes. And then Clay, you've got all kinds of interesting stuff going on. Where's the best place for people to find you online?
Yeah, I'm sure I'll send you over some stuff for the show notes, but Twitter and Instagram, Clay Hepler, fellow Twitter bro, retweet bro here. And yeah, those are two great places to find me.
Awesome. And you've got a great newsletter that I subscribe to also. Yeah, check out that newsletter. Any final thoughts for our land friends out there, Clay?
Yeah, I think that 2025 is going to be a year of unique opportunity. And you can listen to the people that say that land's getting more competitive, or you can just say good, and I'm gonna make it happen either way.
Good. I like that. That's a good one. I think this is going to be our new #1 ranking pod here. So I'll be watching the numbers closely. All right, brother. See you later.
Thanks, Brandon.
The Legends of Land Show.